What's going on, guys? Today we are going to be talking about Palantir. They announced their earnings on November 2nd, and the market has really started to digest the news of what Palantir is doing and how the company is moving forward. But in this video, what I want to do is I want to dive into all of those numbers, and specifically I want to take a look at their margins. I think their margins are going to be very interesting over the next couple of years, especially with the increase in commercial customers and how that will really affect their business. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at how Palantir's stock has traded since earnings. We can see that over the last 5 days, the stock is up a little over 7%. And if we look at the last month, Palantir is up almost 15%. However, that's not from where they dropped down to before earnings of just under $15. From there, they are trading up over 33%. So needless to say, the earnings call was very positive. The stock is trading up in a major way, and investors are loving the company. And if we look year to date, we can see that this has been an amazing year for Palantir. They are up over 200%. If we look at the majority of the gains, they came during the second quarter, where the stock traded from under $8 all the way up to around $20, which was a 160% move up. However, in the third quarter, Palantir has experienced some volatility. The stock dropped all the way down to around $14 at one point and has rebounded nicely back up to the $20 range, but we'll have to see if these gains will sustain. Let's start off by taking a broad look at what Palantir actually announced. So they announced an EPS number of 7 cents compared to an expected EPS of 6 cents. Revenue came in at $558 million compared to an expected $555 million. So when we look at their EPS and revenue numbers, there's nothing really amazing that stands out here. Obviously, they came in with a 25% beat on EPS. However, when you look deeper, that's only a 1 cent beat, so basically in line with EPS numbers. And revenue might actually be a little bit disappointing because they came in line with expectations, and for a company like Palantir that still has a lot of growth ahead of it, I would like to see their revenue beating by a lot larger margin. And when we look at next quarter, analysts aren't expecting a huge move for EPS either. We can see that the average EPS estimate comes in at 7 cents for the December quarter of 2023, and that compares to a year ago when they announced 4 cents of positive EPS. So let's go ahead and dive into their actual earnings announcement and figure out where the positivity is coming from around the stock. The first thing I've highlighted here is their GAAP net income of $72 million, representing a margin of 13%. I'll come back and talk about this margin a little bit more here in a second. The second thing I've highlighted here is their adjusted EPS, which we looked at just a second ago, and it came in at 7 cents. We also have their GAAP EPS coming in at 3 cents. For revenue, they only experienced growth of 17% year over year to $558 million. 17% in my opinion is very low. I want to see Palantir at least at 20%, ideally closer to 25 to 30%. A lot of the positivity for this stock comes around their commercial numbers because they have been able to grow those in a more significant way than just looking at their revenue on its own. If we look at commercial revenue, it grew 23% year over year to $251 million, and US commercial revenue grew 33% year over year to $116 million. So these numbers are a lot more promising. Again, we're seeing numbers in the 20% range as well as the 30% range. And I believe investors are looking at these numbers and seeing a lot of potential growth in front of Palantir in the US commercial space. And that is what's getting people excited. We know that Palantir has a very stable government revenue business sitting at 12% growth year over year to $308 million. This is something that is really just a backbone of their business right now, provides a lot of support for them. However, it isn't going to be a large growth vector moving forward into the future. It's more something that they can rely on as a stable source. If the economy ever goes bad, the government is still spending money, especially on the military, and that's where Palantir is primarily focused. Another huge thing for Palantir is their customer count. They grew this 34% year over year. Their US commercial customers actually grew 37% year over year from 132 customers to 181 customers. And customer count for a business like Palantir is very important. They've talked about their pricing model before, and basically what they do is they like getting customers in using their software and then figure out what they can actually afford. If Palantir gets them into the ecosystem and they see the benefits that their software can offer, then they kind of start having a little bit more flexibility on what they actually dictate the price to these businesses, because they want to offer a software that provides a lot of benefit and they want the customers to feel comfortable paying for that benefit. If it's not benefiting them, then they don't want them to feel like they are obligated to pay a ridiculous amount of money, because we look at some of Palantir's contracts, they are hundreds of millions of dollars in some cases. And that is obviously a little bit frustrating for some customers, especially if they're not familiar with the software. So when we start seeing customer accounts growing in a very significant way, that is going to be a big thing for revenues in the future. So I want to talk a little bit about Palantir's margins. And the reason I pulled up Microsoft here is because Microsoft has a similar business model. They are both offering software as a service. Microsoft offers a bunch of different softwares out to businesses as well as individuals, and that allows them to scale very nicely. And the scaling of a business like Microsoft or Palantir is really beneficial because what it ends up doing is it ends up driving a lot more profitability to their bottom line numbers. Because when you bring in more revenue, it doesn't necessarily mean that you need to spend more money to actually get that revenue, because you've already built out the software that can be implemented across a number of different businesses. And a good example of this is Hertz. So Palantir has actually already partnered with Hertz to help them manage their fleet better using their technology. And how this really benefits Palantir is because if other car rental companies start coming to Palantir and asking for their software, they've already built it out for Hertz. If we see Enterprise or let's say Avis come to Palantir and try to implement their software, then it will be easy for Palantir to actually use that software for these businesses and really not incur a whole lot of additional costs. And you might ask yourself, do all companies benefit from this? Yes, to a certain degree. Obviously, if there are certain companies, as they start to scale, it can be easier to build out some of their systems. However, when you're talking about more like brick and mortar type businesses, like let's say Target, it is a lot more difficult for them to scale up their revenue because it requires large capital investments to buy/build new stores, hire new employees to really start driving up their revenue. And their profit margins tend to stay low or about the same. It really just is a matter of bringing in more revenue for companies like this. However, for a business like Palantir, they can increase their revenue in a significant way, and this will impact their bottom line as well in a very significant way. So when we see Palantir experiencing a lot of growth on their commercial customer base, that is going to have a big impact not only on their revenue over the next few years, but also their profitability. So when we take a look at EPS numbers, we can see that for the current year, analysts are projecting an average EPS of 25 cents. However, for next year, they're only expecting that number to grow by 4 cents to 29 cents. And in my opinion, this 29 cents could actually be very low, because if we start seeing Palantir expanding their commercial customer base, I think that their scalability will actually increase in a more significant way, and their overhead will remain relatively low. This will help bring up their profitability, and we could start seeing EPS numbers actually increasing in a very meaningful way, even if we see revenue slow down slightly. And honestly, right now, valuations aren't very high. We can see that the forward P ratio for Palantir is sitting at a 66.6. However, if we consider that EPS numbers could expand in a major way, this number would start dropping down very significantly. So keep in mind, I do own shares of Palantir. I like this company and I am long it. I want to see the company continue to grow their revenue. Right now, I don't like seeing their revenue under 20%. I would love to see that year-over-year number get back into the 25 to 30% range. That would be phenomenal. And I think they could do that with expanding their commercial customer base. But even if they get that number back up to, let's say, just 20%, I think that'll help their profitability in a very meaningful way because of their business model and how software as a service is set up. So I hope you enjoyed the video. Keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.